Thanks so much for tuning into India Market Close right here on NDTV Profit. And let's take stock of what the markets are doing in the session today. Remember, we are coming off 6 days of market making new highs, and there is yet another day of an uptick on the Nifty, and this is despite the Bank Nifty not doing well, because I think places like metals are the ones which are really shining in trade today. I think if you just look at what the Nifty Metal Index has done, 1.89% higher, and stocks, and we'll mark individual names of course, but large caps, Vedanta, JSW Steel, etc., metals are really playing it to the gallery this afternoon. Bring up the mid cap and the small cap indices very quickly just to show you what's happening in that bucket as well. 0.5% lower for the mid caps, yet another day of underperformance there. Small caps about 0.5% lower as well. So the market breadth, not necessarily the most impressive. That's to be kept in mind, much like yesterday. Get the heat map up on the screen. Look at metals, look at autos at one end. So Maruti, Mahindra and Mahindra, Tata Motors, that brings up the auto piece. Then you have a Hindalco, Tata Steel, JSW Steel. If Vedanta was in the index, it would have been here. The metal story. What is not doing well? Pharma, a bit of a belated reaction and not uniform at all. But the likes of Cipla, Divi's, etc. have come off in the session today. HDFC Bank is sulking a little bit, but a lot more green than red. But that is only on the large caps. Sadly, at the broader end of the spectrum, there's a fair degree of pain with the indices being lower. But Tamanna, I don't know if the large cap metal rally has percolated to the mid caps or no. I saw an odd Lloyd metal do well, but not entirely.
I was just going to say that an odd Lloyd metal perhaps, but not, let's pull up a Ratnamani, for example, and see if there's anything exciting happening there. So, no, not really. So it is about the big boys. Vedanta, Nalco, NMDC, all of them roaring on that China story. And what an aggressive statement, saying that we will come down and cut rates when we need to. So great for metals. But just on the broader markets, and the point that Niraj was making, we look at the broader indices and then the advanced decline ratio as well, where there is some weakness coming in, deepening now, 0.5% down on the Nifty Mid Cap 100 and the small cap as well. So this space not reflecting what you're seeing on the Nifty. Nifty above 26,100 looks beautiful, I agree. But on portfolios, there's a bit of pain. Let's pull up the intraday on the mid cap as well for a second. Just want to see if the cut is deepening in the last few minutes and is that the reason we're seeing? Yes, it is to some extent. You've had quite a soft kind of a day here. Advanced decline ratios just for a second, because this is a day when the headliners are doing well, but the broader markets, that means this is the day your portfolio might not look too great. 1284 on the decline, 822 on the advance. So quite a bit of gap there, widening in the last few minutes as well. Let's take a look at the BSE 500 gainers and losers just to give you a flavor of what's happening there. PB Fintech is having a bad day. And it's interesting, it's happening on a day when Bernstein is so excited about it. So the long story short is that the company in its last analyst call talked about extending into healthcare business as an extension, right? They sell health insurance, let's start into healthcare, like build a hospital chain. Now the company comes and says that we're still thinking about it, not doing anything on it right now. 6.5% down on the stock today in trade. On the other side, easy trip after the promoter has sold about 13% stock and 13% of his share. This has seen maybe that overhang moving out, and that stock 6% up. So that's doing well in trade today. Maruti is the exciting one. Not as much for some of the auto majors, but Maruti, of course, doing very well. And Lloyd's Metal, beaming in that metals kind of a move. But I want to pull up two other stocks as well, Trent and Jet. Let's look at both of these. City call on Trent was a very positive one, and you are seeing it stay up off its highs, but Trent not doing too badly. I would say look at Jet Airways as well, because the whole insolvency case, which has been hanging fire for a while, is now in the Supreme Court. So you've seen the ups and downs there through the day. Right now are 1.5% down. That live commentary actually coming in right now as we speak from the Supreme Court that is hearing the Jet case. So that's one to watch out for. But apart from that, I would say, Niraj, it's all about metals. No other major story. Metals and an odd Maruti.
Yep, a bit of auto, a bit of metals, but metals predominantly. Though on the large caps, Nifty's auto has done well. But big breaking news coming in. SEBI's urged exchanges to tighten the SME IPO oversight. It's called for a meeting of over 50 merchant bankers. Charu joins us with what her sources are telling her. Charu, what are you picking up?
Hi, so the market regulator has been trying to increase its due diligence on the merchant bankers, domestic banks who are dealing with the SME IPOs already. However, they have now come out and spoken to the exchanges as well, asking them to increase their due diligence because they are the first in line in dealing with the SME IPOs. So in a basic effect or in a response to the ask by the market regulator, the exchanges have already met around 50 merchant bankers to talk about this, and on their own accord also they are trying to increase their due diligence and to deal with the matter in a better way, because the regulator has been flagging issues and bubbles and froth in the entire SME IPO process since March this year.
Well, Charu, this will be important, but it'll be lovely to get more updates as in when you pick up about this, because if all the SME bankers have been called and we know that the market is a bit opaque, and we know that there is a worry in that market, then certainly such moves are necessary. Charu, anything else that one should watch out for, any timelines or anything to this regard?
So Ashwini Bhatia, who is a whole-time member of the regulator, in a recent event had also spoken about bringing a consultation paper to deal with the issue very soon. So we can expect that after these investigations around the domestic banks are over, a consultation paper might come into the public. However, we must also understand that SME IPO issue is not something that is just coming up. So the exchanges and the regulator have been trying to deal with this for the entire year. And we also reported previously that around 12 domestic banks, or even more than that, are under the scanner of the SEBI currently. So something could come out very soon.
All right, thank you for that, Charu. And that's a big story to watch out for. Remember, the next couple of days is going to be about SEBI action. On Monday, there's a crucial board meet where we're expecting some announcements on F&O trade as well, SME IPOs. That overall theme, Niraj, of concerns over froth building in some buckets, some corners of the market, especially with the kind of exposure retail investors have, seems to be peaking. If I look at all of these news reports in a broader sense, and we might see something on Monday. Yeah,
it could be very interesting to see, and it will be market moving, I must tell you. But, talk about market moving, Tamanna, look at the Nifty. Like brilliant uptick there. It's just the perfect time to get in our experts to try and understand if you should buy, sell or hold the Nifty, some of the other indices. Kush Bora, Rajesh Palvia, both of them join in. Gentlemen, good afternoon. Thanks for joining in. Rajesh, I'll start off with you this time. Good afternoon. Are you buying the Nifty? There is a big spurt here, 0.64% higher now. Is there a trade on the Nifty?
So we are already in long trade of Nifty. So at this level, we will not buy because we are on expiry day. But in the decline, we have already long for the 26,000 call option, and we are riding that call option. We believe that expiry would be around 26,100 to 200 range now, as the major put base has shifted higher further, as market has now comfortably holding 26,100. So I think 26,100 may act as a support for the day. But going forward, yes, we believe that this rally can extend further, and 26,300 to 26,400 could be the next target for the Nifty, as major put base concentration is now placed at 26,000 level. So I think confidence is clearly there on the put writers. So that we believe that this momentum can extend further. So yes, we are in the long trade of Nifty at this moment. Positionally, 26,400 we are projecting target.
26,400. Do you have a timeline for this, Rajesh? For 26,400?
I think possibly in next couple of days, we may see this kind of level.
Next couple of days? You mean Friday and then Monday? You have one trading day left in the week. Wow. Kush, are you feeling that optimistic? What is your Nifty target?
I'm a little surprised it isn't a couple of hours. I mean, there aren't actually a couple of hours left for the market to close, but that's the kind of momentum we are in. Very clearly, the trend is higher. The trend is upwards. My only concern is that now the risk reward ratio will not be favorable. We've been gunning for a pullback, even if it's for about 150, 200 points. We've not got that. But I will be more comfortable buying on decline. So Nifty anywhere close to 25,800, 25,900 should be a good entry point, at least from a risk reward standpoint. Now the PCR is also hitting close to 1.3, which is suggesting that it might be getting overheated, not entirely there yet. So some pullback cannot be ruled out. I've been very bullish on Bank Nifty for a while now. That view remains. However, there is one interesting data point that's sort of popping up, which is that the 54,000 straddle for the next weekly expiry has been intact. No surprises, because it's a big it's a meaningful number in the sense that it's a 1,000 multiple, round figure, all of that. But the call option open interest does not seem to be shedding on this one. So just a little caution that even if that call is in the money and that option is seeing writing, maybe there is some comfort that the call writers are taking out of this straddle. So I'll be a little watchful. On the whole, there is a premium total of about 600, 650 odd points. So 54, 650, on the upside, 53, 400 on the downside seems to be the broad range for Bank Nifty. Here too, a comfort will come in only when you see a dip of a couple of 100 point at least.
I don't know if you're going to see that dip, at least on the Nifty and the Bank Nifty. You're seeing the spike in the last few minutes or so. But having said that, let's get picks for this afternoon. Whatever's left of trade time, less than an hour, about 45 minutes or so. Rajesh Palvia.
So first is from the NBFC space, that is Bajaj Finance. Very strong momentum in the NBFC space in last couple of hours. We believe the way Bajaj Finance has moved up in last 2-3 weeks, we believe that here we could see continuation of uptrend, and possible target for Bajaj Finance we may see towards 78.50. So one can buy with stop loss of 7690. Second stock is from the metal space, that is Vedanta. Clear breakout on the stock, and now stock is approaching towards its previous swing high, which was formed in the month of May 2024. And the way stock managed to give breakout of almost 12 to 13 week consolidation, that clearly shows that here we could see a continuation of up move. 525 is the next target for the stock. One can buy with stop loss of 494. And the third stock is from the power space, that is Tata Power. Again, here we have seen outperformance, and the stock managed to give breakout on the weekly chart. So the way stock managed to give breakout of almost 15 to 20 week, here there is a possibility that we may see a target towards 495 to 500 for Tata Power. So Tata Power is buy with stop loss of 466.
Okay, so three stocks there from Rajesh, and Tata Power definitely doing well, seeing momentum today in trade. What about you, Kush?
Craftsman Automation. This stock has been on a very steady up move, with small runs of profit booking, but on the whole, the move is a pretty solid one on the way higher. Now, for targets, you're looking at a 67.50, which is fairly close, but then the second target on this one is 6900. Stop loss close to 64.50. The second pick is eClerx. This stock has had a fair share of volatility, but after about 10-15 odd sessions of consolidation, we've seen a big breakout yesterday and a good follow through today. It's sustaining above that resistance of 2900. A close above this one will push the stock even higher to levels of 3030 and 3110. A stop loss on this one should be at 2880.
Kush, I'm very surprised. Very quickly, 30-second answer. You don't have a metal stock, you don't have a Maruti or an auto stock in your picks. Why so?
So Maruti was on our radar, but 13,000, 13,300 has been a resistance for this stock. Hasn't moved past it. Today it has, so we might consider it now. Metals only because there is a big degree of volatility, in some of these names. So sustainability of the rally is a bit of a question mark. But even that said, we like Tata Steel and Hindalco among the pack.
Well, let's talk about the stock of the day, the theme of the day. Though you could argue and you will tell us that teji ke mahol mein aapne mandi kari hai. Because we are talking about a stock that has really cracked, and that is PB Fintech. But it is important to highlight this because on a day like this too, PB Fintech is sulking big time. 2 days on a trot now. Harsh has some details about why PB Fintech has fallen for 2 consecutive days. Harsh, good afternoon.
Good afternoon, Niraj. First off, PB Fintech, just to try to break down as to why it's done what it's done. Down nearly 17% now over the last 3 trading sessions, so clearly under pressure. We're going to try to break down right from Q1 FY25, from the con-call commentary as to what's played out, just to try and simplify this. So let's pull out the commentary first, let's break it down, let's understand it better. In Q1 FY25, we had the MD, the CEO as well as the co-founder of PB Fintech talk about lifetime value of the customer in insurance. Now, the current revenue model in healthcare is revenue per bed. But he spoke of something very different. He spoke about a shift from revenue per bed to lifetime value of the customer. Now, what this means is that the lifetime value of the customer starts with the customer paying insurance premium, and thereafter at some point of time, that insurance premium doing him good, maybe through claims post a hospitalization. So hospitals, there are three basic players in this entire chain. One is the insurer, one is the distributor, and the third is the hospital. Basically, between these three, all the money is basically made and distributed from either insurance premium or from the hospitalization costs. And what basically Mr. Dahiya said is, how lifetime value gets divided between stakeholders currently is going to be unclear, or is unclear for everybody. But I think unless one develops that at some level, it will be challenging. In fact, in the next 10, 15 or 20 years, when some of these realizations come up for payment, especially from an insurance perspective. So, and therefore, he believes that effort is required to be made with regard to the life of the consumer and making that much more simpler and easier. And that's what he's been focusing on since the last 6 months pre the Q1 FY25 con call. And that's exactly what we're going to try to break down, because what the news actually was PB Fintech is foraying into hospitals. The clarification which came out yesterday was very similar to the Q1 FY25 commentary, in fact referred to the Q1 FY25 commentary as well. Here PB Fintech has said that we believe if claims were quicker and smoother in terms of their experience to the customer, it would increase the number of people buying health insurance. They also say that it would be much better if interests were aligned between insurers and hospitals to give customers amazing claims experience, and we believe that would grow insurance penetration in the country, and a decision, if and when arrived, will be informed to stock exchanges. They've not yet arrived at a decision. They've not suggested anywhere here that they are foraying into hospitals per se. All right, so now let's take views. We had, of course, Bernstein come out with a viewpoint earlier today, and they've suggested that they've kept their target price, they've maintained their outperform rating, and what they've said is PB Fintech is talking about backward integration into with hospitals, not into hospitals. And what they are saying is that the founder is convinced that this is the way forward. That is something they seem comfortable with suggesting. The likely plan is to provide hospital bed inventory to customers in Delhi NCR to start off with. And if it works, PB could be the dominant health insurance distributor in the market currently. An actual positive for PB is what they're suggesting. The company has around $650 million of cash on the balance sheet, and therefore that will be used to build this model up, is what Bernstein seems to be suggesting. Last off, some open-ended questions which investors need to keep your eye out on. Will PB Fintech foray into hospitals? Well, that's a question which they've not clearly answered yet. The other one is how much are they willing to invest? They currently have 5,000 crore on their balance sheet in terms of cash. And now, what will the business model be? How will it change? How quickly can it change, right? And how much of a business moat will it create for PB Fintech? So these are some questions which we don't yet have answers to. Maybe that uncertainty creating that kind of 16% fall in the stock price. Possibly,
and the fact that there was so much excitement on this integration plan, and then that sort of the wind going out of it because of what the management said, that also has seen some uncertainty. But meanwhile, just let's look at the Nifty. Zooming ahead, I mean, the kind of moves that we're seeing on the Nifty in the last few minutes, I mean, you might just hit 26,200 very quickly. A quick check on the Nifty once again, and your strategy once again, Rajesh. Right now, if you had to take a call, what would you do?
So just to play this expiry, I think one can look to buy 26,200 call option at this juncture, just for an expiry point of view, and keep stop loss of 26,150 to hold this call option. The way Nifty is now, negotiating with 26,200. I think, and even most of the sectors have also, started participating in this up move. I think rollover action can, take Nifty further higher to 26,250, 250 kind of zone also. So I think that would be a very quick move. So I think those who are very quick in trade, they can do this kind of trading, because on expiry day, it always to be very quick to punch your orders. So 26,250 would be the immediate target where we can see Nifty.
Okay, Sudeep Bandyopadhyay joining us this afternoon while we are setting perhaps for another new high at closing, at least last minute afternoon gains coming in on expiry days. Sudeep, great to speak with you. I want to ask you first about autos, your view on Maruti and Hero. One zooming today, another stuck on speed breakers thanks to that UBS note. What would be your call on both?
Well, as far as Maruti is concerned, I will be holding my investments back. I think the valuation at which now it has moved, I think a pause is a bit right course of action. Of course, there is a Hyundai IPO coming, and around that time, I think there will be a lot of excitement in all the auto counters. So I'm not talking about that scenario. I'm talking about today. As far as Hero MotoCorp is concerned, my view is different. I think with the festive season coming in and rural demand really picking up post-monsoon, Hero MotoCorp should start doing well. In fact, they will start doing better compared to many other two-wheeler competitors of theirs. So in spite of competition, in spite of what Honda is doing and the views around that, I think Hero's business will expand and the numbers will start looking much better in Q3, Q4. So at this stage, I would be buyer in Hero MotoCorp.
You'd be a buyer in Hero MotoCorp. Rajesh, do you agree with that at these levels? And Hero has actually, to be fair, recovered quite a bit from this day's lows. Would you still come in and buy?
The overall auto pack is looking bullish, and Hero Motor, yes, some brief correction has been taken place in this stock, but stock is comfortably holding about a 20-day moving average. And in this kind of market, the stocks, those are available about 20-day moving average, are considered as a bullish stock, and we believe, yes, one should use this decline as a buying opportunity. 5960 should be your stop loss. Possible pullback can extend to 6200 to 6250.
Okay. Kush, what about you? Maruti and Hero, both technical call?
So Maruti finally has broken above that band of 12,000 to 13,000. I think, and this is on the back of very good volume. So I think from a momentum trade perspective, not a bad idea to play for targets of 13,750 and 14,000 now. This newfound excitement and momentum could very well take the stock higher to these levels. Hasn't really participated, but now can. Now the resistance zone of 13,000 will start acting as a support zone. So maybe just under 12,900 is where you place your stop loss. Hero MotoCorp, yes, even I concur that, there was a good run, 2 days of profit booking and rebounding from close to those support levels. Not a bad idea to take an entry at the current level. The stop loss on this one is very clear, close to day low, 5,900. That's your stop loss. On the upside, you're looking at a 6,200 and a 6,400 as a target. So both these stocks for slightly different reasons, but looking good.
Okay. All right, let's come to a story which was an NDTV profit exclusive. Not one, but a whole host of brokerage houses have actually cited that story. And it's about a stock that everyone has been tracking very closely, HDFC Bank. Vishwanath Nair is joining us for more on that, and it was his story, in fact. So, Vishwanath, let's start by setting the context of the story that we broke on NDTV profit, and then what is the kind of brokerage commentary coming in?
Right, Tamanna. So what happened with HDFC Bank, according to what sources are telling us, is that the bank is looking to offload about 60 to 70,000 crore worth of the loans from its balance sheet. This is primarily to bring down the credit deposit ratio at the bank. Now, why is the bank doing this? Well, after the merger with HDFC Limited, that credit deposit ratio rose to over 100%. And that's something that a bank has to manage on a regular basis, because otherwise it becomes unsustainable to run a business. Brokerages have, of course, taken note of the story that NDTV Profit did. And in their reports, they're mentioning that this will help the bank bring down the credit deposit ratio, while alongside that reduce the pressure that is there on deposit raising. So specifically, commentary from HSBC seems to suggest that the pressure on deposit raise will come down because of this. It will be NIM accretive because what the bank is going to do is likely looking to sell home loans, which are low margin businesses. So as low margin businesses go down on the balance sheet, the net interest margin actually improves. On the other hand, Nomura, which also quoted the NDTV profit report, says that the ROE implications will actually be slower than expected, and that this is likely going to take some time for HDFC Bank to come back to normalcy because these sales are not going to happen immediately. 70,000 crore worth of loans will be sold off only over a period of time in FY25, and that's when the impact of all of this will start showing up. So Nomura being a little bit more circumspect, but HSBC pretty constructive.
Thanks a lot for that, Vishy. So, well, HDFC Bank, not quite above 1800 as yet, and banks are a bit sedate today. But per se, this has been one news flow that's triggered a lot of reaction in the stock and within the analyst community, which actually tracks this as well. So, bear this in mind. Okay, what we need to do is slip into a very quick break. But on the other side of the break, we'll get you, of course, the top buy and sell ideas, update on the primary market action, and more importantly, if you're getting enthused by IPO subscriptions, my colleague Anushi will join in and tell us what has happened to the companies that have got the highest subscription and how has their performance been on listing day and subsequently as well. Very informative piece. You don't want to go anywhere. Back with India market closed right here on NDTV Profit. Look at the Nifty. This is scintillating stuff. Frankly, that's the headline. You can show the Nifty chart for 1 hour and it'll just look very good. Don't have to do anything else, but of course we'll do something else. But 0.9%, 26235. We were cheering 25,000 a few weeks ago and waiting to see if we'll do something more. We are at 26,200. Before we talk about some stocks which are spiking in trade and take some trading calls, Sudeep Bandopadhyay, in your portfolios, are you taking money off the table or are you staying put? Because this is a really, really strong bull market.
Well, Niraj, I think the party is on. So as long as the music continues, I think I will try to hang around. So there is no desperate hurry to exit at this stage. But yeah, a lot of stocks are being watched continuously. And I think that is the right thing to do. Because in some cases, I do believe that the valuations are looking really, really full.
Yeah, but okay, the point, frankly, Sudeep, the market wants to know where is it that the valuations are not looking full, because that's the minority, unfortunately. Almost everywhere else, it's very easy to say that the valuations are looking very, very full. Just trying to understand this, Sudeep. Anything that you are comfortable holding on or buying afresh?
Financial services, BFSI, I think that's one pocket where definitely there is scope, and it is definitely a lot of stocks here are worth buying.
Okay, some stocks which are moving up in trade, and very quickly some thoughts there from our experts. Shriram Finance, Ami Organics, Gopal Snacks. Just look at the kind of moves that are happening on those stocks. This is a nifty stock, Shriram Finance. Ami Organics is 5% up, and the intraday for both Ami and Gopal will show you some very sharp spikes. So watch out for those as well. Kush, very quickly, any of these three names as a trade?
In fact, two of them, Niraj, Shriram Finance and Ami Organics both, and they have been our recommendations not too far, not too far back in the past. Shriram Finance breaking above the 3,600 mark, continue to hold. Next levels to watch are 3,750. At least the immediate level is 3,750. On the downside, you have support at 3,525. Ami Organics too, a big break above the 1,700 mark. You're looking at 1,770 and then an 1,820 on the upside. Support comes in at 1680. Both of these, if you have, continue to hold. If not, you could add some. You could consider adding some.
Okay. All right. Quick calls in a market that is just booming. Do you climb the rocket ship now or wait for it to come back down to earth? That's the question. Rajesh, what are the most exciting stocks right now which you think haven't shown this kind of move yet, even as we are looking at the Nifty at an all-time high, way above the 26,200 mark, very easily above the 26,200 mark. You've given your index call, but what about any stock calls right now?
So Nifty has almost touched the level of 26,250, which we discussed a few minutes back. So I think that intraday trade is already done for the day. Stock where we are focusing can participate in this up move, that is Piramal Enterprises. That stock has corrected and now showing a reversal from its recent swing low. So I think Piramal Enterprises can be a stock where one can focus, and possible target towards 1120, 1130 we can see in very short period of time. And another stock, that is Tata Motor. Here also we believe that this stock has potential again to move back above 1,000 level, and possible target for Tata Motor we could see towards 1,040, 1,050 again. So one can buy a Tata Motor also with stop loss of 975.
Okay, Tata Motors with stop loss of 975. Tata Motors on a tear. I just want to quickly pull up the Nifty contributors before I get to another very interesting stock that we're tracking today. But just for a second, let's see the Nifty contributors. It's all auto. M&M, Maruti, Tata Motors. That's where all the buzz is. On the lower side is NTPC, ONGC, L&T, so your old economy kind of play. But between three auto majors and HDFC, that's what's pulling up the Nifty. At this time, markets, of course, at all-time highs. But let's talk about another stock that has been in focus, the big brokerage call, which is Trent. Trent really is what the market is eyeing, even as HSBC has a note out and it's very, very bullish on it. Now, Mihika, my question is that Trent has already seen a fair bit of run up. All the fundamentals that the street is excited about is well known. Is HSBC saying anything new or just reiterating the story which is well known?
No, it's actually Citi that has initiated the coverage on Trent, and it's with a buy rating. And like you mentioned, yes, the stock has run up. It's more than doubled its share price in 2024 itself. Target price of 9,250 rupees, which suggests a 21.5% upside further. Now, what the note has highlighted is higher revenue compounded annual growth rate of the company versus its Indian listed retail companies. And this growth is mainly on the shift of the company's model from a single format to a multi-format. So first it was Westside, now it has other brands like Zudio, Suma, and many more. And the jump in FY25 estimates is also what this Citi has highlighted, which defies the weak consumer sentiment that's in the market, as well as the slowdown in discretionary spending that we have seen. They do value the standalone EBITDA of the company at a 65 times EV to EBITDA. And while this is at a 20% premium, they say that the valuations are justified given the strong revenue as well as the EBITDA CAGRs that the company has seen of 41 and 44% respectively. And lastly, what they've done after initiating coverage on the company, they have put it at its top in terms of pecking order in the India consumer discretionary and retail space. And now Trent is higher in the pecking order when you compare to Jubilant Foodworks, Kalyan Jewellers, as well as Devyani International.
Okay, Citi, my bad. It's Citi which has that call on Trent this morning. HSBC is actually another note, the Ola Electric note that we were thinking about. But yeah, Citi on Trent is bullish. They say that the 20% valuation premium is justified completely. Sudeep, I'm wondering if you agree with that. And for that retail kind of discretionary move, is Trent still a top call?
Well, Trent has, beaten all estimates for the last many quarters. Every quarter they come and deliver a smashing performance. So, irrespective of whatever we think of the valuation, I think the benchmark keeps moving upwards. But having said that, I think, I'm a little skeptical buying at this kind of valuations. So I will definitely not buy or recommend a buy. But there is no denying of the fact that there is a significant, a pull as far as this particular stock is concerned. And it's been doing wonders for the investors who are already in this counter.
Okay, Trent is maybe an exciting story even now, Kush, on the charts.
I agree with Sudeep that, if you want to buy a stock which is technically and fundamentally stretched, then, please be our guest. But, I would be happy to see it somewhere close to 70, 450, 70, 500 from a trading perspective. So even if it does give you that kind of a dip, then makes, a lot of sense to buy. Although, even now as we speak, the volumes are picking up on this one. So you may not get it anytime soon. But too stretched for me, I would probably give it a pass at the current level.
3% higher and counting. Too stretch. You could argue, you can make that argument too. So many stocks though stretch. The question though, Rajesh, is whether there's some stocks which are not stretched and what to do with those. Because I think I got a sense that Hero MotoCorp could be bought into at lower levels. Could that argument be extended for some of the other two-wheelers as well?
I think other two-wheeler like TVS Motor, Bajaj Auto, they are also in the uptrend only. And the way these stocks are holding at a higher level, we believe, yes, here also we can see a good traction and possible rally can extend further. The whole automobile space is still in the bullish trajectory. Whatever minor dips which we are getting in all these stocks are, attracted by the buying interest. So I think we could see outperformance to continue for most of the automobile stock. Yes, one can look to buy TVS Motor also at this juncture. And the way stock is trading about 2850, I think the next target for this stock on a positional perspective could be around 3000 also. So buy on dips is the strategy for TVS Motor, and your stop loss should be placed at around 2835.
Okay, well, so that's on two-wheelers. But, the point is, if you're really thinking of whether or not you should buy into Hero MotoCorp fundamentally, let's present the bull and the bear argument for that. Mihika and Rucha join in for the same. So who's the bull, who's the bear?
I'm the bull, she's the bear.
Okay, let's start with the bull argument.
Yeah, let's start with the brokerage views first on why we're talking about this today. We have MK, which has a bull case, maintains a buy rating, has raised the target price to 7,000, which presents a 15.4% upside. And the bear case, which Rucha will be presenting, is the UBS, maintain a sell rating at 3,350 target price. When you talk about the first point is on volumes. Now, MK says that the two-wheeler industry's wholesale volumes have been performing strongly, all categories seeing targeting double-digit annual growth. Rucha, what does UBS say about volumes?
So talking about the volumes, UBS says that, however, Hero's retail volume growth will lag peers because there's a 6 lakh unit difference between the kind of inventory that wholesalers have and retailers have. So essentially, Hero MotoCorp is pushing the inventory to the wholesalers rather than, catering to the actual demand is what UBS says. But talk to us about what MK has on this one.
MK says that the inventory levels are actually stable and they've marked the monsoon, favorable monsoons and the upcoming festive and marriage season to help and benefit positively when it comes to vehicle dispatches. But let's talk about market share now. Hero MotoCorp has been losing market share, but MK believes that the market share loss is behind the company. They expect a 50 basis point improvement in domestic motorcycle market from FY24 to FY27. But UBS presents a different view.
So you rightly mentioned, Mika, that Hero MotoCorp is losing its market share and it is now below 24%, 400 basis points or 4% behind Honda. But UBS believes that this decline in market share will continue going forward, and it is likely due to erosion in motorcycle volume number one, and also case coming from competition facing from Bajaj and Honda as well. And it also expects a shift in consumer taste towards electronic vehicles, largely in the rural areas. So market share largely declining due to volumes number one, and number two, the kind of consumer shift is what the UBS believes.
And lastly, I think no argument is not complete without talking about the valuations. Now, on the bull case, we have MK values at 24 times the P ratio, and they believe that this valuation remains favorable because they expect the success of their latest launches of Hero MotoCorp to have a full year impact and recover the market share that has been lost.
You're right, Mika, but you know what UBS says actually, that valuations are higher than its 5-year own average, wherein in terms of UBS estimates, it values the company at around 26 times its FY26 earnings versus what MK believes is at 24 times. But to end this conversation over here, let me talk to you about the analyst recommendation according to Bloomberg. Well, it's a bullish scenario according to Bloomberg with 28 buy calls, 8 sell calls as we can see, and 6 hold calls. But even after a bullish scenario over here, the return potential is negative at around 10%. So, Tamanna and Niraj, this is what we have largely on Hero MotoCorp.
Great piece, the bull and bear version, and I love it that both of you are standing on the opposite side. So it tells people how you should see the other point of view in any conversation.
Just made it up, yeah? Did
where
we?
There are two sides as well. All right, Hero is definitely buzzing. Frankly, so is the whole market. I just want to pull up the Nifty, and if you're wondering what you're seeing on the side of our screen, you're seeing the indicative closing price. The indicative closing price is something you're seeing only on NDTV Profit. We're telling you where the Nifty could close today. 26,222 is our indicative closing price. The Bank Nifty at 54,397. I mean, well above the 26,200 mark. I actually want to take a quick call from Kush on our indicative closing price, and then what is the strategy for what could be a fabulous Friday again? I think Rajesh might well be proven right about the targets he set in the next couple of days. I mean, you're crossing 26,200 today itself.
But as I said, Tamanna, I mean, if there were a couple of hours to close, and his targets would have been hit much sooner.
Yeah.
But there's a stark possibility that we might hit that 26,222 mark. Closing around that is probably due to the averages a little unlikely. But again, given the kind of momentum, and if you are long, continue to stay long. That's the only thing that I can chip in. But yeah, I do maintain that at these levels it does look a little elevated to enter, even from a trading perspective, even from a short-term trading perspective.
Okay, and if you're already holding long positions, what are you doing?
Oh, you should then continue to hold because the momentum is for sure there. So now what we've been talking about 25,800, 25,900 as your stop losses, they should be up to 26,000, where the put base is now starting to concentrate.
Stop losses moving up. Rajesh, you want to talk to us about what you should do with an indicative closing price of 26,220?
Yeah, so looking at data setup, yes, we are almost about to close around 26,220, 222 kind of level only. So I think yes, the close which we are getting about 26,200, that is above the call concentration area which was there in the data. So I think another round of rally we could see in the first day of October series tomorrow. And I think possible target, as we mentioned, 26,400, we could achieve in next couple of days, maybe Friday or Monday.
By the way, there's a bit of an uptick in Sun Pharma for all the brickbats that these companies have gotten today, and for the right reasons. The stock is doing something completely different, and maybe courtesy the market, 1.5% higher for this one. So really good show given by Sun Pharma as well in the session today. So Deep, one would have thought that if the Indian drug regulator is saying that things are wrong and due practices haven't been followed, so on and so forth, the stocks would have shown a reaction. I mean, nothing happened in pharma. What did you make of that news? And is that does it not have any investing implications?
I think market is ignoring a whole lot of negative news at this stage. There is too much of euphoria, bullishness, which is backed by liquidity, and I think that's propelling pretty much everything upwards. That's my reading of this scenario. But having said that, I think Indian pharma has a whole lot of strengths, and the US pricing pressure on the generics. I think it was intense till about a couple of quarters back. I think things are stabilizing there. And so large Indian pharma companies, which have a significant US business, I think they are their prospects, their position is improving. And I think that's likely to stay. Domestic pharma is doing very well. There is about 25% CAGR in domestic pharma business. And some of the companies which have a significant domestic presence, of course, will continue to do well. Some of them are getting into acquisitions of related players and strengthening their position for the future. So a lot of excitement is there definitely in pharma. And we have to be careful in, even if we, based on some news, if we decide to sell or exit some counters, we need to be careful as to what we are doing, because prospects are looking bright as far as pharma is concerned.
Okay. Well, just before we get into closing strategies, I think it's also important to try and pencil in what has happened in the primary markets, because the issue that is open today, Tamanna, KR and heat exchanges, we're talking about the Manba Finance getting 224 times, right? KRN as of now is subscribed 50 times already. This is day 2. So you expect some serious subscription there. But here's the thing. I think what Anushi is trying to tell us right now is companies which have gotten heavy subscription, what were the listing day gains? And fine, they may have had listing day gains. What's happened subsequently? Because it's great information.
Yeah. What happened eventually? But just having said that, and we'll go to Anushi in just a second, the data, SEBI data, which tells you that 50% plus exit in the first week. So everyone's here. Most people are here for that party.
To make the pop.
Everyone's there for the pop. But in any case, Anushi, what are the top 2024 IPOs performance today? How are they faring?
Hey Tamanna, so it's been raining IPOs this year as well. If you look at 2024, we've handpicked the top 5 ones in terms of subscription. First on the list is Vibhor Steel Tubes. It has received massive 300x of subscription when it came for its listing in February. Along with that, there's Manba Finance, which is set to be listed in nearby time as we go. 224x of listing that we're looking at. Then there's Gala Precision, Unicommerce E-Solutions, and BLS E-Services of this 2024 list, which have topped in the subscription status with about 162 to 200x of oversubscription that we have looked at, and this reflects their listing day gains as well. If you look at the listing premium that these companies came out with, Vibhor Steel Tubes with over 300x subscription tops the list with about 181% of listing day gains that we are looking at. Even BLS E-Services and Orient Technologies, I'm not including Manba Finance as it's not listed here. So 117 to 129 gains that even these counters have seen. Orient Technologies and Gala Precision though have seen returns in the range of 40 to 41%. But Tamanna, you pointed out a very clear point that, it's the early party hood that we are looking at, and then investors take in the exit. So if you see the kind of listing day premium and compare it to the current performance of these, we are seeing most of these counters in a negative trend, with Vibhor Steel Tubes, which was the strongest in terms of the listing premium and subscription, seeing the most pressure in trade, about 40% of a loss that we are looking at since its listing day closed in terms of stock performance. Even Gala Precision, it's currently at the similar levels, 2% down. Unicommerce about 2.4% gains, while BLS e-services another weak counter with about 38% of losses that we are looking at. But let's just highlight why this has happened and onto the outlook for some of these companies. So Vibhor Steel Tubes, if we are looking at the decline in stock price, as we see, is attributed to the SEBI putting it under surveillance, and also weak set of Q1 FY25 results that has led to this performance. Gala Precision Engineering, on the outlook for this one, it maintains its revenue growth and its margins and EBITDA margins to remain in the 18 to 20% range. So outlook on this one continues to be a focal point. If you look at a Unicommerce e-solutions, it reported about a 9.2% of a revenue growth, while management expects that going forward it will outpace the industry growth moving forward. Coming to BLS e-services, Q1 FY25 revenue performance, flat performance we're looking at, while PAT reported a solid growth. It also acquired a 55% stake in a company for an enterprise value of about 190 crore. And the last one on the list is Orient Technologies. If we look at its Q1 numbers, revenue was about 27% up, while PAT about 30% up, but the stock, as we see, is down about 2% since its listing that we are looking at. So these are some of the key highlights of the top 5 ones in terms of subscription and how they're faring right now.
Okay. All right, that was a great piece. Thank you for that, Anushi, because it's giving you a sense of the reality check after, the first heady week or so has gone. Not necessarily that all IPOs fare like that. I just want to pull up Bajaj Housing Finance because that's the recent blockbuster, so to speak, and look at what's happening there since its listing price. And those gains continue strong as far as Bajaj Housing Finance are concerned, at least. So that's one which, at least that's a good story so far, but we'll have to check again in a few weeks. I just want to get a take on the whole IPO situation from Sudeep before we get to our BTST calls. Sudeep, the whole host of IPOs, subscription numbers we keep talking about. Are you concerned? And which are the IPOs that you're really looking forward to right now?
Well, I'm not really concerned. There's enough and more liquidity in the market. So what we need is more high quality IPOs. If we have to ensure that the Indian market continues to quote at a reasonable valuation and remains attractive to global investors, we need to ensure that the depth of the market increases. And that can increase by the coming of more and more good quality stocks in the market through IPO. That's very, very critical. So I'm not worried about the IPOs. Yes, the valuation and euphoria is a bit worrying. As far as the forthcoming IPOs, of course, like everybody else, are very interested in Hyundai IPO. I think we need more automobile stocks to be quoted on Indian Stock Exchange. We really don't have too many, and it's a good company with about 16-17% market share. The second largest automobile company in the country, four-wheeler. They have been innovative, so it's interesting. We're definitely looking for that. Swiggy, obviously, because Zomato has such a fantastic turnaround story, and they have definitely rewarded shareholders in a big way. So Swiggy is in the same space. They have quick commerce, they have food delivery, so definitely it will be watched carefully. And of course, NTPC Green. I've been a votary of NTPC for a very long time, and the green energy business they have created is definitely worth watching as far as the IPO is concerned. So these are the 3 IPOs I'll be keenly watching out for.
That's where the excitement is. NTPC Green has some news coming in. They have inked deals for 10 gigawatts in Toto. The stock still a little down, but remember the NTPC stock has been zooming on the hopes of shareholding quota when the IPO actually hits. So this already seen a fair amount of a run up. All right, let's get BTST calls. Kush Bora, let me start with you. On a rock and roll Thursday afternoon, what are you going to do Friday morning?
Hopefully book some profits. I'm a little cautious on the indices, but stocks not as much. The stocks, a lot of these names have been doing fantastically well. Sudeep also mentioned BFSI space. My pick also happens to be from that space. Cholamandalam Finance. If you see, this stock has actually, bounced quite well in the recent past. And after, probably a day of what you can call profit booking, the stock is again on its way up. So from a near-term perspective, perhaps even a BTST perspective, 1665 is the target. If and when that is hit, you could hold on to this one for the second target of 1690, and 1610 is where you place your stop loss. So Cholamandalam Finance is the BTST pick for today.
Rajesh, what is your top BTST?
So two stock idea. First one is Apollo Tyre, very strong momentum throughout the week, and the way stock is closing above 570, we believe that this momentum can extend to 590, 595 kind of zone. So Apollo Tyre is buy with stop loss of 568. Second stock is from pharma space, that is Dr. Reddy. We believe the stock has shown strength in last couple of days, and now stock is trading about a 20-day moving average. 68.50 is the next target for the stock for BTST. Keep stop loss around 66.90.
Okay. Sudeep, not a BTST call, but anything that you're looking at and finding value right now for a shorter term trade?
Oh, shorter term trade, yes. Some of the gold finance companies can be looked at. I think there is value sitting there. So Manappuram as well as Muthoot. There has been a little bit of setback in terms of Manappuram's microfinance subsidiaries IPO, but I think that's a good opportunity for acquiring it. Also, one can look at some of the asset management companies. They have been out of focus for some time. Some of the asset management companies definitely merit attention, considering the amount of money they are garnering and considering the way the market is performing.
Okay. Well, some snacking companies are also doing well. So people are not only making money, but snacking in the markets too. Gopal Snacks, Pratap Snacks, and a clutch of others have had a really good run. But gentlemen,
and just on that, people are not snacking; they're gorging
on the
market
snacks
right now.
Gorging on the markets and snacking on the snacks. Maybe that's the way to put it. But well, gentlemen, all three of you, thank you so much for taking the time out and being with us on such an important day, the highest close that we've had in our history, and pull up the markets. It is, as much as it is metals, it is really autos as well, which have done so well. The markets kind of, well, not closing about 26,200, but you shouldn't be too greedy because 0.7, 7 days on a trot, that we're closing at record highs, which is quite something.
Yeah.
And Tamanna will talk about the breadth, but just pull up the Nifty 50 heat map and show you the large cap performance and show you what the large cap auto names have done. Maruti 4.5%. Mahindra and Mahindra 2.5%, and then a clutch of others. Tata Motors 2.8% as well. So shouldn't forget that in the top three names. And frankly, if you see, then the metal names, which is Tata Steel, Hindalco, and JSW Steel. And lastly, not too many losers. I mean, Reliance and HDFC Bank are quiet, but they're not sulking in trade. So there's no negative contribution coming from there, which is aiding the market mood in the session.
Yeah. I mean, your biggest loser is less than 2% down. So, I mean, that's saying a lot in terms of the mood of the market. Should we just quickly pull up Nifty contributors before we get to the advanced decline, just to show you how much autos are doing today and the weight that they're pulling, even RIL there. I mean, not big moves, but definitely contributing to what we're seeing. L&T down because of a brokerage note, and that really maybe Cipla impacted to some extent with the action that the regulator has taken on certain drugs as well. But advanced decline ratio, this is the question is, are you going to be going home happy with your portfolio? Possibly not. As much as we're cheering Nifty touching 26,200 and coming down back, the fact is that the declines are more than the advances. Market breadth is not very positive. Let's pull up the mid cap and the small cap, because remember, it's been a Nifty story most of the afternoon, and the question is whether the mid cap and the small caps are together. They're just about flat now. When we started the show, this was in the red and it's just about flat right now and closing completely flat. The small cap index still about 0.5% down. So this area is definitely still hurting, and that's one important thing to mark. If you can just quickly pull up sectors and see what is giving the most pain over there, and it seems to be the consumer durables that are seeing a bit of pain. Even the Nifty CPSE is down. It's all about autos and metals, as Niraj has mentioned. The top gainers and losers, just for a second to see what that is looking like. Kalyan Jewellers feeling the heat. Maharashtra Scooters, I'm not too sure why that is down. Devyani International has been having a tough day since this morning. On the other side, what a bump up for Easy Trip, after I'm wondering if the promoters wishing they'd sold one day later. Because today the stock is about 7% up. Vedanta, Nalco, all of those metal names continue, and Lloyd's Metal as well.
And some snacking names, as we said. I think some really good moves for them. But I mean, when was the last time you saw Pratap Snacks being up 20%? Quite something.
Yeah, let's just pull up the Pratap Snacks chart before we close for the day. Pratap Snacks buzzing in trade, Gopal Snacks as well. I suppose this is one space which will always do well, but some news here perhaps pushing it to a 20% circuit at close. But that's all the time we have on the show. From Niraj, me and the team that put the show together, thank you so much for watching.